Hello money magnets and master traders, it's your Uncle Charters. Welcome back to my YouTube channel, and in my YouTube videos I cover many different ticker symbols, giving you guys price action analysis, or to be more specific, I give you guys actionable trade ideas, and I'm going to give you guys lots of different pivot levels that I use, support and resistant levels, so that we can trade them, because Uncle's trading approach is know the levels, know the setups, and trade it unbiasedly in real time. So before I give you guys my trade ideas and levels, I want to explain for potential new subscribers, new viewers, on how I use them. And I always use them on the 15 to 30 minute chart. Lowest I go is 15-minute chart. This right here is an example of a 15-minute chart. So you remember last week, last Wednesday, the day before Thanksgiving, Uncle had a 679 level. It cleared on the 15-minute chart. So when we see it clear on the 15-minute chart like this, that is your trigger to enter calls. If it breaks down a support level, that would be your trigger to enter puts. But the market makers, they didn't give us an entry for puts, they gave us an entry for calls. And to trade it unbiasedly, we take the setup that the market gives us. The 679 level cleared, we entered call, and our next level was 681. Our profit taking level was 681. You play it level to level, you take most profits there, and you leave a runner in case the market keeps on going. That day the market decided to chop, but the following Friday, because Thanksgiving it was closed, but Friday it was open until 1 p.m. Eastern time. Once again, Uncle had that 681 level that I was watching, and you can see on the 15-minute chart that it cleared and turned into support. We can see on the 10 o'clock candle it started testing that 681 level as support and showed Uncle buying pressure. At that time, Uncle let his Discord members know, as of now, the 681 level is showing some buying pressure. As long as above 683 is in play, no puts unless 681 fails as support. And as you can see, it worked out well. It continued to bounce, hit my 683 level. If it would have broken down the 681 or the 679 level, I would have let my Discord members know to enter puts. But we just follow whatever the market makers give us. We react to the price action. So in this video, I'm going to give you guys some pivot levels so you guys can learn to enter whether calls or puts, playing the setups, so that we can all make money together. That is the money magnetic thing to do. So we must go to the daily chart here and look at the context, and we can see that SPY is officially in breakout mode, but one breakout is not enough. We need to see some follow through, but based on this breakout, it's telling us that more upside is the plan. But as traders, we must be prepared for any case scenario, because it's not guaranteed. There is no 100% in the stock market, especially if you are trading for the short term. So I'm going to give you guys the bull case scenario and the bear case scenario, and of course the chop case scenario. And the reason I do this is not to predict, but to prepare us so that we know how to react to whatever the price action decides to do. And when I say react, I mean trade it, because the money is made in the trade, not the prediction. So Uncle's not trying to predict. I can give you guys my opinion, but my opinion could be wrong, my opinion could be right. It doesn't really matter. What really matters is the levels, the setups, and our ability to trade it in real time and attract those money to get our P&L up. So what does the context say right now? It says that SPY is in breakout mode. Breakout mode equals bullishness. And if there is going to be more upside, that means the breakout must stay intact. It must stay valid. For this breakout to stay valid, two levels must hold as support. 681, that's the fib level, and 679, that's based on this blue trend line. As long as SPY is above 681 and 679 lowest, we can expect more upside. And my targets to the upside are, well, it's above my 683 level, but above 683 I have 684.5, 686, 688, and 689.7. If 689.7 clears, we can expect new all-time highs with 698.8 and 700 as my targets to the upside. So once again, as long as SPY is above those pivot levels, the breakout stays intact. And if the breakout stays intact, more upside is possible. But the bear case scenario is also possible as well. And if we get it, we want to be able to trade it. It doesn't matter up or down. As a trader, we can trade it all because we are ready and we know what scenarios, what pivot levels must break down. Remember, Uncle uses the 15-minute chart. You can use what you feel comfortable. I use the 15-minute chart. And if I see 680 683, 681, and especially the 679 level fail as support, I will be looking to enter puts and bet to the downside. Below 679, SPY would then enter false breakout mode, which is the price action telling us to be bearish. I believe that as traders, we can communicate with the price action. We can see what it's saying. And when it's breaking down support levels, it's saying to us, it's telling us to bet to the downside. And below 679, I do have targets to the downside: 676, 674.7, 673, 671.5, and 670, which is around the 50 DMA. Those levels continue to fall, that would be your bearish follow through, and you should be feeling good if you enter puts. But do not enter puts unless the price action behavior reflects bearishness. For it to reflect bearishness, we must break down support levels. Remember the 15-minute chart. When it clears, when it clears my resistant levels like it did with 679 or 681, that is when we bet to the upside. So if we clear more of those levels that I mentioned to the upside, more bullishness incoming. But if we start breaking down support levels, 683, 681, 679, that is your trigger to enter puts. Moving on to QQQ, which is also in breakout mode. We have to look at the last level, the last critical level that was cleared. For QQQ, that was 618.6, a fib level. So that tells me as long as above 618.6, we have more upside incoming. 620, 621.6, 623, and 624.8. Uncle give you guys multiple levels so that you can play it level to level. And if you want to catch the home run move, you want to go for those $10 moves or whatever, you do it with your runners. It's about managing risk for me. So above 618.6, we can expect more upside. There is a nice gap all the way around 632-ish area. Can that get filled? But if we break down 618.6, the bulls will be a little bit in trouble. Not too in trouble, but a little bit in trouble, because it might be a pullback. And if it is a pullback, I have levels for us to watch at 616.2, 614.8, 613, 611.77, 610, and 608.6. Now for QQQ to enter false breakout mode, it would need to break back below 608.6. That would break down a support level of, based on the fib level, it'll break down the 50 DMA, and it'll get QQQ back below my downtrend line, invalidating the breakout. So remember, we want to enter puts when we break down support levels, because as long as above 618.6, we can expect more upside. Here is Tesla. I know some of you guys was hoping Tesla would drop back to the downside, but so far that's not the case. And that's okay. It doesn't have to do what we want it to do. We need to react to it. So right now, if you want to see some bearishness, 430 and 427 are the support levels that must fail. And if those support levels fail, a lot of the bearish people on Tesla will get what they want, and we can expect a $10 to $20 drop back to the downside, maybe more. But as long as above 427, Uncle will remain bullish. And if there is some bullish follow through, we need to see 433 clear as resistant, 435 and 437 also clear as resistant, because if those levels clear, we can expect another $15 to $20 pop to the outside. So if you are bearish on Tesla, I don't recommend shorting or entering puts until 430 or 427 fail as support to give us the false breakout setup. But as long as above, more upside is the plan. And remember guys, we can make money in either direction. Even if you're bearish, you can still make money playing bullish setups. And I believe that making money, attracting money, is the true money magnetic thing to do, because with the money comes in our hands, we can do amazing things with it. Moving on to NVDA. Now, seeing some bullishness with SPY, QQQ, and Tesla, but for some reason, NVDA is looking bearish. Is this AI hype over? We'll have to see. But if it is going to be bullish or reclaim its bullish status, 178.8, 180 are two levels I need to see clear, and then it should give us a bounce up to 183.4. And if that level clears, maybe, just maybe, we can get the third test of this downtrend line around the 188.5 area. And above 188.5 would put NVDA in breakout mode, and it would be very bullish. But right now it is looking bearish, and as long as below 178.8, more downside is possible, but it'll need to break down more support levels to trigger either puts or more downside. Those levels I'd be watching is 177, 175.5, and 170. 74. If those levels fail, that is your trigger to enter puts and bet to the downside. Remember, Uncle uses the 15-minute chart. You can use what you're comfortable with. Let's keep it moving to Amazon. 230.4 would be the level Uncle is watching this week. As long as above it, we can expect more upside on Amazon. 236.5 and 240 plus would be my target. But if you want to go short, 230.4 and 229 are the levels, support levels that must fail, and that should give us a drop back down to 222.7, 221 or much lower. Here is Meta also going for the bounce, and the last critical level that it cleared was at 642.8. So to be bearish, multiple support levels must fail, but 642.8 is the critical one. If that happens, we can expect a $5 to $10 drop back to the downside. But as long as above, we can expect more upside, and the next resistant level is at 648. If that level clears, an $11 to $15 pop would definitely be possible. Here is Microsoft also going for the bounce. 487.7 is the critical support level. I have one at 491, 489, and then 487.7. As long as above, we can expect more upside with 493, 494.74 as my next resistant levels. If those levels clear, there's a good chance we go hit 500 plus. But I would not enter puts unless 487.7 fail as support. And we can expect at least a $10 to $15 drop back down, possibly go to fill some gaps. And if that 200 daily moving average gets tested again, it held on the last bounce, but if it gets tested again, it's a great chance it will not hold. Here is Apple, overall looking bullish still, but I'd watch this chop zone. Apple is in a choppy area, 276.7 up to 279.4. As long as between those levels, that's chop, neutral territory. But if we want more upside, 279.4 must clear to put 281, 282.4 or much higher in play. And if we want some bearishness, 276.7 must fail to give us a $5 to $10 drop back to the downside. Here is IWM looking bullish as well, and as long as above 246.3, it will remain bullish, and the next resistant level is at 249 and 250.5. If those levels clear, we can expect more upside to new highs, but I will not short until the price action gives us bearish price action behavior, and bearish price action behavior is breaking down support levels, and I have it at 246.3 and 245. If those levels fail, we can possibly get a pullback back down to 240, which is this down trend line, and below 240 would put IWM in false breakout mode. And last but certainly not least, here is the VIX. Volatility has been dropping on the VIX, which explains we only getting one level to level move lately. But if we want volatility to return, the VIX must pop and bounce off of this 16 level. That's the yellow line. If 16 holds as support and resistance at 1710 recaptures or clear, 19.5 and 21.3 would be my targets back to the upside, and the VIX above 20 is a great sign for volatility. But if we drop below 16, that means volatility is dropping. So we need to be careful with the day trading. We can still day trade, but we want to be careful not to try to go for home run moves, because when volatility drops, those home run moves are less likely. So we focus on level to level and keeping our P&L green until volatility returns. I do have some good news though. The DarkPool levels have broken over $1 billion in premium again, which tells me the big money players are getting active, very active, and that's a good sign that volatility can return this week coming up. 1.3 billion in premium at the 679.8 level and 1.1 billion in premium at the 683.44 level. If SPY stays above or break above these levels, we are bullish and we can expect more upside. But if SPY breaks below these levels, then we can expect some type of sell-off. Guys, thank you so much for watching. If you want more content from Uncle Chartist, check the pinned comment below. Join Uncle's Discord and be part of my extended family. Thank you for watching. I love y'all. Peace.